Hello everyone and welcome back to the Monopolistic Investor. Today we'll go over Q2 2025 Microsoft earnings and see what the key highlights are for long-term investors. So let's start. Microsoft reported its earnings on the 30th of July with a massive 18% revenue growth rate on a year-over-year basis, with $76.4 billion in revenue. Their net income also increased, which is a clear indication of an improvement in their profitability, up 24% year-over-year to $27.2 billion. Analysts were expecting at $3.37 EPS, but Microsoft went one step higher with an EPS of $3.65, which is a growth of 24% on a year-over-year basis. This is a massive positive sign for long-term investors, as the revenue is what makes a business stay alive. Many investors focus solely on the top-line growth. Let me just say that this isn't the only thing that we should look at, as profitability is also necessary for a company to sustain itself. We'll go into it in a second, but first for each segment. So for each segment, it should come as no surprise that their cloud revenue grew the fastest, at 26%. Due to their investments in OpenAI, which surely runs on Microsoft Cloud, compared to their productivity software and computing at 16% and 9% respectively. The gross margins decreased 1 percentage point, but that shouldn't be a sign to worry about, as they are actively investing in AI, so it's expected. The results shown by Microsoft Azure were outstanding. Azure and other cloud services revenue grew 39% year-over-year, while the all-cloud segment grew at 26%. If you're confused about the naming, it's a common point of confusion, so let's clarify the difference. Intelligent Cloud is the entire segment, while Azure is the core platform where programmers like me do their work. Now back to the metrics. This 39% bet all expectations with the AI workloads, or in other words, the specific tasks made by an AI, as well as cloud migration, when a customer switches to a different cloud provider, Microsoft in this case. Operating income increased 23% on a year-over-year basis, with the operating expenses going up slightly by 4%. The gross margin percentage decreased by 4%, showing that the big investments currently made into AI are making the short-term profitability a bit harder. Of course, long-term investors always look at the ROI, and even if the short-term ratios are falling, in the long run I believe this is a catalyst for growth. Building a monopoly isn't cheap, and you can see that we have the massive capital returns to shareholders, with $9.4 billion returned this quarter, 6.2 in dividends and 3.2 in share repurchases, which for some is preferred due to no taxes. Operating expenses for the whole company increased 6% year-over-year, which, even though Microsoft is very active in its investments in AI, is still not that much, and is a positive sign for me. Microsoft also noted the fact that their OpenAI stake has returned a $1.7 billion loss this quarter, accounting loss. But Microsoft management is constantly saying that these kinds of losses are beneficial for the company in the long run, so I'm not worried as a Microsoft shareholder. Capital expenditures increased 27% year-over-year, and while for some investors that is negative, which I don't understand, as when a company is investing in its growth, that's positive, that is aligned with the fact that Microsoft wants to be ahead in the AI infrastructure race. In terms of their cash flow, we can see that it's up 15% year-over-year, which is great, given that Microsoft market cap recently briefly surpassed $4 trillion. So what does it mean for our monopolistic score? I've given Microsoft a 6.2 out of 10. Now that might seem low after a quarter this strong, but my algorithm heavily weighs a company's current ROIs and margins, which are slightly compressed due to their massive AI investments. This score reflects a company that is sacrificing some short-term profitability for what it believes will be total long-term dominance. You can explore the full breakdown of the score for free using the link in the description. Thank you guys for watching and stay focused on the fundamentals. Goodbye.